There are three stocks which have stumbled for the first time after a decade of outperformance in the markets. And where have they stumbled? What went wrong? But most importantly, what does the future hold for these counters? Those are the three questions that we are posing. But which are these companies? There's not many prizes for guessing the first one. It is Trent. The second one that we're tracking is Cantabil. And the third one, Atlantis Beck. We don't talk about Atlantis too much, so we'll put that in perspective as well. But overall, when you see the last 10 years have been phenomenal for all of these counters, especially 2017 was a year where all three did very well. 2021 19, we saw Cantabil having a stellar year in terms of performance, while the last couple of years in 2023 and 2024, Trent was a big winner. It has given almost 46% negative returns since entering into the Nifty 50 in September 2024. So these are the price actions over the last decade. But let's now start putting focus on something like a Trent first. Now, stock's down 46% since entering the Nifty 50, but the growth rate has actually declined from 50% on a yearly basis to 20% in the last 4 quarters. And quarter 2, they actually reported 17% revenue growth, which is much lower than the guidance of 20 to 25%. And hence, you did see that 8% reaction in a single day post reporting their quarter 2 earnings. But when you look at the declining trend in sales, that's actually reflected in its EBITDA as well as in sales numbers on a square feet basis as well. So from roughly about 1,489, which is the first red bar, was the sales figure at that time, has now fallen to 1,187 rupees. So quarter 3 sales per square feet will be a key metric that we'll track. On the EBITDA as well, it's fallen from almost 260 rupees per square feet all the way down to 193. FI ownership has also been falling in the last few years. From March 2023, where it was at 24% for Trent, it has fallen to 16.81% and has been falling on a quarterly basis, because compared to last quarter, it was at 18.3. So the outlook is more important now for Trent at this point of time. The first one, and we don't talk about this much, is Vested Members, which is its membership program for Westside brand. It is one of the key ones because almost 19 million members now, estimated that 80% of Westside's revenue comes from this membership program. It could be a key one, similar to what we've seen for other brands like Zara, amongst others. We'll continue to watch going forward. Store additions, we continue to monitor as well. But largely, a new young brand, Burnt Toast, is what they've introduced. How the growth happens will be something to watch. Atlantis Beck, very quickly, is the other one. A specialty company and part of the Altana group, largely in the electrical distribution space. So chemicals is something that they do. Sales momentum, when you look at very quickly, between FY13 and FY17 is the other one that I want to quickly point out. This is, of course, about the company in electrical insulation as well as in construction space as well. But let's look at the numbers now. We'll give you a...
Puneet, I just have one question though. I mean, the numbers, and when you're trying to talk about the numbers, have you looked at the past comparison alone, or are you also talking about the future in some sense?
Where we are, because this reflects that over the last decade or so, 4 times growth is what Atlantis has done in profits. Sales have also doubled, but the momentum has been slightly impacted. Key differentiator for the counter for Atlantis will be the access to the parentage of Altana Group and the niche space in the electrical distributions and insulations. The ownership has been one of the key ones that we are talking about, but it's a high barriers to entry in this space will be a key benefit for Atlantis Beck going forward. Finally, Cantabil, a 2,000 crore market cap company, but it's been a huge outperformer in terms of sales momentum. From just about 100 crores in FY14, it's jumped 7 times to 721 crores in FY25. With operating margins have gone up almost 9 times in the last few years, from 12% in FY17 all the way up to 28%. What's also important is the store addition. 25 stores added in quarter 2 of FY26. Same store sales growth has although been subdued. And this is one of the key points that has hampered the stock price in 2025. The other aspect, the devil in the details, is that 75% of all stores are actually company owned and company operated. So going forward, store additions will require a lot more cash from the company, and hence you will have to continue to monitor that. Big vision of store openings to 725. EBITDA margins expected to be in a similar range. And the women's segment, which is just 11% of the revenue, will be something that we'll track. So overall, these are the 3 stocks that we've put focus on for a better 2026, hopefully. Whether it's something like a Cantabil, which gives buy 2 get 3 offers in terms of festive period, or a toast that you like burnt for Trent, is something that you have to choose as investors.